afternoon. You're watching Business World Live here on One News. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Monday. All right, investors on sell-off mode after the long weekend. The main index on the second straight day of declines here. Shares lower by close to 0.5% to 6,959.21. That bucks the rally seen across the globe, Asia in particular, enjoying gains across major markets here. Japanese and South Korean shares outperforming the Nikkei. In fact, as you can see here, is up 1.9%. That reached the 30,000 level. That's a first since 1990. That is Japan's economy expanded by 12.7% in the last quarter of 2020, beating expectations and marking 2 straight quarters of growth here for the Japanese economy. Well, the PSEi may be sitting out the rally, some consolation here with some stocks outperforming. Let's kick things off with Converge. That jumped to its highest on record with a 20% climb, but the telco pared back gains. It ended Monday just up 4.4%, following its disclosure that they are looking into the latest satellite technology, including Elon Musk's space exploration technologies. Converge has since clarified that a possible partnership is still premature at this stage. Inquirer first got wind of the news, saying SpaceX and Converge have met several times. Billionario also saying, that both players are inching closer towards a deal. Converge now at 18 pesos and 52 centavos a share. And then from there, let's do a couple of earnings report here. Kicking off with Cemex, full year net income was down 24% to 985 million pesos from 1.3 billion pesos in 2019. Net sales likewise also dipping by 16% here to 19.7 billion pesos for the full year of 2020. Cement volumes also declined by 11%, with prices also inching lower by 6%. That's on the back, of course, of the series of typhoons in 2020 amid the ongoing pandemic. But despite that bit of news here, the cement manufacturer still saw shares rise close to 0.75%. Why is that? Well, they are saying that they're projecting local cement sales volume to actually recover somehow this year. They're estimating that to grow by 4 to 6% as the restrictions ease and both private and public sectors speed up construction activities. Cemex shares now at 1 peso and 38 centavos a share. Now, if Cemex still managed to advance despite weak earnings, can say the same for SM Prime here. They saw net income plunge 18 billion in 2020. That's full year. That's down by 53%. Revenue likewise also dropping by as much as 31% to 81.9 billion pesos. Net income, of course, coming from a 38.1 billion peso base in 2019, while consolidated revenue was down 31% from 118 billion pesos previously. Well, the mall revenue was down by half as well to 23.6 billion pesos, while the residential unit proving to be a bit of a bright spot here for the developer. Revenue edged higher by 6% to 46.5 billion pesos. Operating income also saw a 16% bump up as earnings disappoint investors, letting go of SM Prime stocks here. SM Prime down 1.2% to 36 pesos and 75 centavos a share. Now, here are other headlines we're keeping our eyes on. The Banking Association of the Philippines is pushing for a so-called safe harbor provision in the proposed amendments to the bank secrecy law. The Philippine Star reports that in a position paper submitted to the House Committee on Banks and Financial Intermediaries, the group says the provision would shield banks from potential civil liabilities or frivolous suits over deposit examinations done by the Bangko Sentral. Now, under the bill filed by Committee Chairman Quirino Representative Junicua, the Bangko Sentral would be authorized to access deposit accounts for investigative purposes so long as parameters are met. The accounts should be suspected by the BSP to be involved in fraudulent activities. The group says the ability of the Bangko Sentral to share information gathered from investigation of deposit accounts should be limited only to other regulatory or law enforcement agencies. At present, deposit accounts may only be examined when there is written permission of the depositor or when ordered by the court. Now, the central bank insists the need for the urgent enactment of the Financial Institution Strategic Transfer or FIS bill, saying bank relief measures are only applicable until year end. BSP Deputy Governor Chuchi Funacher told Business World that they would continue to monitor the impact of relief measures on banks' financial capacities and calibrate if need be. But these measures are set to expire by end December this year. The FIS bill was ratified by Congress last December and is now awaiting the president's signature. Banks' bad loan ratio reached 3.6% last December, with non-performing loans reaching 392 billion pesos as of end 2020. That's up 75% from the previous year. The FIS bill allows banks to dispose non-performing loans and assets to increase risk-bearing capacity and enhance their liquidity position. Now, no big screen dates just yet. The government has delayed the planned reopening of cinemas in Metro Manila and other GCQ areas to March 1. Palace spokesman Harry Roque made the announcement earlier today after Metro Manila mayors expressed concern on the move, which was supposed to take effect today. Last week, the interagency task force allowed the reopening of cinemas and leisure establishments in areas under general community quarantine. Such easing of restrictions, however, is still subject to health and local government guidelines. The Palace and the Trade Department earlier backed the planned reopening of cinemas, saying it would help revive at least 300,000 jobs in the industry. Now, how will the looming reopening of cinemas drive recovery, especially in the near term? To pick his brains, we have Carlo Asuncion, Chief Economist of Unionbank. Good afternoon, Sir Carlo.
Hello. Yes. Thank you for
All
having
right, Sir Carlo, so nuance us a bit. How big of an impact do cinemas have when it comes to economic activity, owing to the fact that, of course, they are main crowd drawers in malls?
Yeah. Well, basically, you know that going to the movies is something that everybody wants to do. Everybody wants to, relax and this, as they say, see a movie. No, and that's very important. And we know that because of the pandemic, discretionary spending was affected, and unfortunately, watching movies is part of that discretionary spending.
Okay, now from an economic standpoint, is it the right time now to actually open malls? And how do you balance that with concerns that might lead to another uptick in cases?
I've been watching particularly what's been happening in New Zealand. New Zealand has been very successful in controlling the pandemic, controlling the spread of the virus, and yet now they have had like three confirmed cases, and they're locking down for 3 days. So I mean, those types of situations are, that's how strict they are. I know that it's very difficult to really balance, as you mentioned earlier in your report, 300,000 jobs are hinged on it. So therefore, it's very important that we weigh everything and make sure that we don't compromise with the protocols that have to be imposed for this particular discretionary spending to resume.
All right. Now, moving on from there, in an interview earlier during Business World Live, you have Bangko Sentral Deputy Governor Dakila saying consumption is expected to return to pre-pandemic levels in 2022. Do you forecast the same?
Well, in our baseline forecast, we're looking at 2022 second half. That's a very optimistic, in fact, optimistic expectation. So we know that in 2022, that's an election year that actually will hopefully add on to consumption eventually. So I think that's why consumption, because we know that it is a huge chunk of our economy, and definitely if we could make that lever of economic growth start, then going back to pre-pandemic levels would be much easier.
Now, speaking of consumption, Carlo, one of the main drivers, of course, remittance that fell 0.4% in December to $2.89 billion, bringing full year down by 0.8% to $29.9 billion. But if it's any consolation, that also saw a 21% markup from November. Is this a sign of better things to come?
Well, actually, the point 0.8 decline is better than we initially expected. We expected around about negative to negative 2% for the full year. Even at the beginning of the pandemic, we were like expecting 10 to 20% decline. So with this 0.8 percent decline, that is actually better, way better than expected. So you can see how resilient our remittances or all of the remittances are during this pandemic.
Okay, but that slight, if I may say so myself, just a very slight decline in December, was that a cyclical thing? Do we expect that to carry on until at least in the coming months or from January to at least the first quarter of 2022?
Well, we did expect actually a deeper decline,
Mm-hmm.
about I think -9. So, but the consensus is a plus 1.9%, as mentioned. I'm a bit. It's actually, it tells you how much the pandemic has really affected it, because even on a December where or when we do expect a huge uptick of remittances, you see a decline. So that's really that's something that you have to take note moving forward. So we can actually say that um, this is something that in terms of the remittances, it's not something out of the woods yet. It's something that we have to carefully watch, at least moving forward.
Okay, well, definitely one thing that we're not out of the woods yet. You have agricultural issues here. We're talking about pork supply, of course, with the government setting a price cap. At the same time, you have proposals now to lower import tariff. When do we expect prices and supply to normalize?
Yeah, well, it's a very difficult question to answer, actually, Jess. No? So, well, yes, last week we were actually computing how much is what do you call this? How much is needed to be imported, and we looked at the number of the government's plan. It seems like that number is actually needs to go higher still, considering the usual consumption of meat, particularly pork, for the Philippines, at least, yeah, for the market. No, so if you're asking when it would be, probably when they start importing, you'd see an easing of prices, definitely. So, but in terms of because they did cull, according to some sources, 4.5 million heads, and that's a lot. No, so that's even way bigger than, well, at least that's probably one third or two. Yeah, one fourth. Sorry, one fourth of the inventory, the usual inventory that we have. So that's a huge chunk. So you just don't, you know, go there and let it come back right away. So you have to grow them still.
Yeah.
So it's gonna take some time, but the importing will ease some pain. The
Okay,
prices.
a lot's banking on that imports, but at the same time, we balance that you have a number of concerns, of course, from the hog raisers themselves over importation issues. But thank you very much for your time this afternoon, Union Bank Chief Economist Carlo Asuncion. Thank you, sir.
Thank you.
And those are the biggest news this trading day, February 15, 2021. Catch Business World Live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News.